Technical analysis is never easy. That's why today, I'm going to share with you guys the tips and tricks on how to effectively identify trends using trend lines and how to properly draw them on your charts. At the end of this video, we are going to master the technique to draw trend lines that work effectively for most of the time. But before we touch on that, you need to know that there are three main types of trend lines that we'll be covering today. The first one are moving averages, and do not be surprised about this. And then we also have the up or down trending trend lines. And lastly, the horizontal support or resistances, which are trend lines as well. All trend lines act as support or resistances. Therefore, it is important for you to master this technique so that you can better time your entries, be it for investing purposes or to spot trade setups for trading. So firstly, what are moving averages? Moving averages, or MA for short, are trend lines that tells you the average of the closing prices for the past 50 days, 150 days, or 200 days, depending on how you set it. What you are seeing on the chart here are the 200-day exponential moving average, the 40-day exponential moving average, and the 50, 100, 150, and 200-day simple moving average. The simple moving average, as the name suggests, is just a simple average of closing prices, and each candle has an equal weightage to the average. It reacts slower and therefore is less resistant to noise in the market. So as an investor, I rely mainly on the 50, the 100 not so much, the 150 and the 200-day simple moving average. And as for the exponential moving average, the latest candle has the highest weightage in the average. I normally use this for trading, and I have a totally different way of determining trends using EMA while trading. More of this will be shared in future videos. From these moving averages, we can identify in the long term whether the chart is in an uptrend or a downtrend. So you can see that the chart started off on a downtrend, and how do I know that? You can see that the 150 MA is above the 50 MA and both are sloping down. Likewise, the 200 MA is sloping down and the price is below it. And as time progresses, we see that slowly the moving averages started to change their direction, and at this point we see that the 150 crossed the 50, and when both starts to slope up, we can say that the chart right now is on an uptrend. Either this, or you can rely on the price crossing above the 200-day moving average and the 200 moving average started to slope upwards. Whichever signal comes first, we will take it as the chart has crossed into an uptrend from a downtrend. And I've said that trend lines can help us time our entries. So how do we do that? Now, you first have to understand that different stocks behave differently from each other, and their behavior may change with time. For example, when we look at this chart over here, we see that the stock respects the 50-day moving average, the 50 MA, very nicely. Every time it touches, soon after it bounces off upwards. And this has repeated for 3 times in fact. But take note that this only happened recently. Before that, we see that the stocks does not respect the 50 MA as much. And then there are also stocks that respect different MAs at different time point. For example, for this stock over here, you see that it first bounces off the 150-day moving average. Afterwards, it does not respect the 150 anymore. This time it bounced off the 100, and the second time here, and the third time. So for 3 times, it respects the 100-day moving average. But what happens after that? The uptrend accelerates, and from here on, the stocks move on to then respect the 50 moving average. And the reverse is also true for stocks that are on a downtrend. For example, for this stock over here, you see that it first rejects the 20-day EMA. Afterwards, it decides to reject the 40 EMA and then come back to the 20 again, and this time respects it rather well for 2 times. And for the third time, it decides to go all the way up and rejects the 50-day moving average this time. So the key here is to understand that different stocks behave differently at different times. And it is important for you to identify which moving average does the stock respect. And this will be especially useful for swing trading. So before you take a long swing trade, you would like to see that the stock is currently at a strong support, signifying a near-term bottom. And you will know if the support is strong by checking if that support has been previously tested before. So for example, if I were to take a long swing trade here, I'll first check whether or not the stock previously respects the 50 MA, which is around here. And we see that it breaches the 50 MA rather deeply and shows no signs of bouncing off the 50 MA at all. However, at this time, when it starts to show signs of a bounce on the 50, I'll go back to check if the stocks previously respected the 50 MA and bounced off it before. And sure enough, it does over here. So this will give me the confidence to take a long swing trade here and ride the wave upwards before taking profit somewhere over here perhaps. And again, when the stock starts to correct and retrace back to the 50-day moving average, and when I see a signs of a rebound and that it has respected the 50 MA before, this will give me the confidence to take another long swing trade right here. Likewise, for the other chart, I will not swing here because it has not respected the 100-day moving average before, but I'll take a long swing trade over here and over here. And for the first time that it bounced off the 50-day moving average, I will not do anything because it does not give me the confidence. I do not know whether it will come back down further to test the 100 again. But then at this point, because it has tested the 50 before, I now have the confidence to take a long swing trade at this bounce right here. The reverse again is true for the stocks on the downtrend. I will not do anything here and here because the moving averages does not tell me that they are strong enough to support or resist the stock. At this time point, however, I will have known that 20 EMA is a strong resistance because it has rejected off the stocks once. And then I'll short the stock and cover my position over here. So I hope that gives you a clear idea on how to use the moving averages to help you in swing trading. And now the next question is, what happens if the stock does not respect any MA at all? So you can see that in this last chart over here, the MAs are all haywire, crisscrossing over each other, and the chart does not bounce off any of the moving averages at all. So this is where you'll need your artistic talent in drawing your own trendline support and resistance, if any. So how do we construct our own up or down trending trend lines or horizontal support and resistances? So when you open up a chart for analysis, you want to connect the high to the high, and this will give you the resistance. And if you connect the low to the lows, you will have a support trend line. Let us take a look at the charts and see what I mean by that. So for demonstration purposes, I'll be using the Think or Swim software from TD Ameritrade. So if you are using the same broker as me, feel free to open up your software and have some hands-on as well. Otherwise, you could either practice it on your own software or download the paper account from Think or Swim to play with it. So from this chart right here, what do you see? You can see that the stock originally respects the moving averages pretty much, bouncing off the 100, and the 100 once more, and after that followed by the 150. And then subsequently it respects the 20-day EMA very nicely, as we can see over here. And during this period, you see that all the moving averages are lined up very nicely in sequential order. The 20, by the 40, by the 50, the 100, 150, and 200. This is what we call an MA fan. If you see this, it will be very clear to you that the stock is on a perfect uptrend. But things starts to get haywire during this period onwards, and everything starts to crisscross and the stocks no longer respect the moving averages as much. Now if we zoom into this period, you may see that the stock seems as though there is no correlation at all, moving in a haywire fashion in ups and downs. But when I open up any clean chart like this, the first thing I would like to do is to see whether I can identify any up or down trending trend lines or horizontal support and resistances. So to draw trend lines on this platform, you first go to this active tool icon at the bottom right hand corner and you select the trend line button. So what I like to do is to first start off with the highest point of the chart and click on it, and after that drag my cursor down and see if the line that I'm drawing can connect as many highs as possible. And you can see that this line right here looks rather nice. Now why do I say so? It connects a high to another high, a high, and the trend stops right there. So it connects 4 high very nicely, and although there's one point whereby it breaks through the trend line, which results in it being undesirable, but it is fine for now. We'll just stick with this line at this moment. And with that, we have our downtrending resistant trend line. So I'll do the same and see if I can fit any downtrending support lines during this period. And let me start off again with the highest low on the chart, which is somewhere here. And they'll give me something like this. So sometimes it might not be perfect on the first draw. You can select the line and do your best to find the line of best fit for the chart. So would this line be better? Instead of placing my trend line like this, where it only cuts 1 point, 2 point, and 3 point, if I were to shift it right here, I will now have 1 point, 2 point, 3 point, 4 point, and 5 points. Now, this would be a better supporting trend line, wouldn't it? So with that, I'm going to fix this line right here. And here you can see that it bounces off once, twice, 3 times, 4 times, 5 times. You expect it to come down again for a 5th time, but this time the stock seems to have found its bottom somewhere over here. In addition to downtrending trend line, you can also draw a horizontal support or resistance. Now, do not attempt to draw a horizontal line using this trend line tool. No matter how hard you try, it is going to be extremely difficult for you to draw a perfectly horizontal line. To draw horizontal trend lines, there is this tool called the price level. Click on it and just go to any point on the chart where you think there's a horizontal support or resistances and just double click on it. So you can immediately see that there is a support right here where it supports the stock for once, twice, 3, 4, 5 times. And when it breaks down over here, it came back slightly to test it as a resistance and then go back down again. When it breaks through this resistance, it then act again as a support for one more time right here. So this is one example. Now let me show you another example using Boeing. So for Boeing, you can see that the stock has been consolidating in a sideways manner for the past 2 years. And when you see a sideways trend like this, the first thing that you want to do is to draw horizontal support or resistance for analysis. So similarly, go to the price level 2 and then start to play around the chart looking for the line of best fit. And you can see that at this point over here, it resists the stock pretty well. So I'm going to place one line over here for now. And for support, where can we place a good level of support? Right here, you can see that throughout the past 2 years, the stock has been bouncing off this support line rather reliably as well. You can see that it tests once and twice and 3 times, and then 4 and 5 times again. So this would be a good level of support as well. So the key here is that support levels need not be just a single line. It can be a price range, and multiple support or resistance lines can come together to form a band. So when the first lines got breached, the stock will then move to the second support line to find support over there. And if it gets breached again, you can see that it will then find a new bottom, which is somewhere over here. At this point, it resists the price pretty well, and at this point again, it supports the stocks pretty nicely as well. The stock price found its bottom 2 times over here, and afterwards it went on to rebound rather strongly. And lastly, for our last level of resistance, we can identify one to be somewhere over here. So when drawing trend lines, avoid cutting the candle body with the trend lines. And do not force your way through to fit a trend line just because you think that it should be in the right place. So let me show you what I mean by that. And let's take this trend line for example. Do you agree with me that this trend line is the best trend line that we can draw at this area? Or would this be better? Let's say if we shift it down further right here. Which would be the better trend line? I know that the drawing of trend lines can be subjective. Some person may see this to be the better trend line as compared to the one over here. So I'll leave it up to you to decide. But generally, it is alright to cut the shadow of the candle, but as much as you can, avoid cutting candle bodies like the region over here, the region over here, and here. Try to avoid this area where the trend line would have been deemed as ineffective during those periods. When drawing your trend lines, you need at least 2 connected points for it to be a potential trend line. And when the price comes down or go up to test it for the 3rd time, you then have what we call an effective trend line that you can act on by basing your investing or trading ideas on it. Lastly, also note that a broken trend line reverses its role. So when the support gets broken, it now becomes a resistance and vice versa. And lastly, as a small bonus example, you can see that Boeing right now is somewhat ripe for trading. You can see that it is bouncing off this support zone over here, which has been tested multiple times throughout the past 2 years. So what we can do is perhaps to take an entry right here with a stop loss of somewhere around here and have a take profit target of somewhere around here. If you're someone who have not learned how to trade yet and not sure of how to manage your risk, on how to place your stop loss, entry point and your profit target, hang on tight as this exciting content will be coming your way shortly in the future. To some of you, this may seem like some sort of sorcery, right? Just draw a few lines here and there and we know how stock prices will move. That's not true, alright? We don't predict and we should never predict how stock prices will move. Technical analysis is all about nailing down the probability, the more probable cause of price action through trends, which we have just went through previously, and the probability of how stock prices might react in different situations due to the psychology of market participants. This is what we will be covering next. In summary, the reason why technical analysis works is because of this concept called the self-fulfilling prophecy. Just that instead of expectations over here, we now have probability. So let me explain what I mean by that. At this point in time, Boeing is at its all-time high. So many people will be watching this area the next time the stock price reaches near it. And as people see that the price is having some difficulty trying to break through this resistance over here, what happens? They start to develop a bearish sentiment. They could either take the profit if they are trading at this level, or they could short the market to initiate a new trade. Both of these creates selling pressure. The supply is more than the demand now. And the more the number of people sees this and think in the same way, this starts to develop into a positive feedback loop, creating our self-fulfilling prophecy. So the key here is to identify the trend line or zone that is being watched by most of the market participants out there. The more the number of people are watching it, the more likely your technical analysis and your drawn trend lines will play out correctly for you. And for that, you will need to practice, and practice. And this is why it is important for you to connect high to high, low to low, and at the same time avoid cutting candle body, because it will tell you that the trend line is not effective at all and that people are not watching that line as closely as you are. And when you have 3 connected trend lines, you now know that the trend line is at least effective in the short term and that people have identified and respect the same trend line that you have identified yourself. And so the reverse is also true for supports. When the stock first bounces off over here, the next time the stock price reach around this level, people will be thinking the same way. They will think that this is the near-term bottom and they will start buying up, either as an investment to dollar cost average their way into their position or to initiate a long swing trade. And this will create a buying pressure where the supply now is less than the demand, driving up the prices to a certain point whereby the opposite is true again, just like the scenario that I've described previously. So when we see a stock like this bouncing off to and fro between 2 levels, we can say that the stock over here is at a consolidation. Of course, remember that this is always a probability game. Sometimes the lines that we have drawn, no matter how effective it is, and no matter how widely the market participants are also watching it, there will always be chances that a fake breakout may occur, just like the one we see over here. So it may have seemed like your trend line have lost its effect, either through a fake breakout or a real breakout. Remember that support and resistance will have switched their role. So if this is a real breakout, this right now will have been a support instead. However, we see that this line fails to support the price the next time it comes down, and instead of supporting, the price break right through and fell to the next support level, as we have seen previously. So when this happens, retrospectively, we can then say that this is a fake breakout. So whatever you do, remember to keep your risk management right as a trader. As an investor, if you believe in the company, which you should in the first place, then continue to average down as the price reaches the next support level. Lastly, I would like to say that the same apply for moving averages as well. The reason why they work is because the time period of the MA are widely followed by investors and traders as well. I choose to use this set of moving averages, the 20 EMA, 40 EMA, 50 SMA, 100 SMA, and 200 SMA. But that does not mean that you have to do 2. There are also other popular moving averages out there, like the 6 EMA, the 18 EMA, 21 EMA, 50 EMA instead of the SMA that I'm using, or the 100 SMA, which I also look at but do not base much of my decisions on. So you just have to find out whichever set that you are most comfortable with. In fact, my different trading strategies make use of different set of MA as well. So with that, I've come to the end of today's video. I hope that most of you by now will have grasped the important and essential concepts of how trend lines work and how to construct your own trend lines for your own analysis. Make sure to practice this every day. When I first started out, I have to open up tens of new stock charts and start drawing my lines again and again to master and perfect this technique. Do remember to like, subscribe, and share this video out to your network so that more people can learn these essential techniques and benefit from growing their wealth in the market. I see you next time.